As this year draws to a close and a new one appears, we've all carried lessons through markets and fears, not from predictions or headlines or noise, but from steady decisions and everyday choice. Hello and welcome to Money and Power. Today, on this Christmas Day, I want to take a quieter moment to reflect. Not on charts or crises or warnings, but on the one lesson 2025 taught us about money, about resilience, and about how ordinary savers can step into 2026 on a far stronger footing than many people realize. Because despite all the noise of the financial world, it was the quieter truths that mattered most this year. If you look back across 2025, a year shaped by rising interest costs, stubborn inflation, geopolitical tension, and record public debt, you notice something quite fascinating. The people who came out ahead weren't the ones who sprinted, they were the ones who kept walking. Not the people trying to outguess every headline, not the people who panicked at every downturn, and not the people jumping from one strategy to the next. It was the people who focused on steady, repeatable habits, maintaining liquidity, reducing bad debt, buying quality rather than hype, staying diversified, avoiding extreme predictions, protecting purchasing power, and making decisions based on process and not emotion. And what stood out most this year was how these habits held up under pressure. While the world debated whether a recession was coming, or whether the markets were overpriced, or whether the currency system was creaking, ordinary people quietly taking small, sensible steps found themselves in a far stronger place than they expected. 2025 taught us that consistency beats brilliance, especially in a world designed to be uncertain. The global economy didn't collapse. It didn't boom. And it didn't settle. It simply shifted. And those who adapted calmly were the ones who did the best. Economically, 2025 was a year that broke all assumptions. Interest rates weren't the emergency. Complacency was. Rates stayed higher for longer, and those who adjusted early handled the environment far better than those waiting for the old normal to return. Inflation cooled, but prices did not fall. Households discovered that returning to low inflation doesn't undo the last 4 years of cost increases. Essentials still consumed a larger portion of income. Budget discipline became essential again. Debt, both public and private, reached a level where it now shapes everything. At over $38 trillion in the United States alone, the cost of servicing that debt has become one of the single most influential forces in global finance. It affects currencies, markets, interest rates, and long-term planning. Technology accelerated faster than almost anyone expected. AI moved from being a trend to becoming a structural driver of productivity and job evolution. A handful of major tech companies drove a significant portion of stock market returns. And many savers realized something quietly important. If you weren't learning, you were slowly falling behind. And people rediscovered the value of simplicity. In a world full of noise, the strongest strategies were the simplest. Build liquidity, diversify, hold quality, protect the downside, stay flexible, and keep learning. The complex strategies often failed. The grounded ones thrived. Here is the central insight 2025 gave us. The biggest gains came from small, repeated decisions, not big, dramatic moves. If you built an emergency fund, you navigated volatility with confidence. If you reduced high-interest debt, you opened space for future opportunity. If you invested regularly, you avoided emotional swings and benefited from compounding. And if you prioritized protecting purchasing power, you kept your money from quietly eroding. That often meant choosing high-yield savings accounts or including assets that hedge against currency depreciation, such as commodities, gold and silver, or international equities. If you held gold or other safe haven assets, you soften the impact of currency pressure. And if you stayed diversified, no single shock could derail your plan. And here's something very few people talk about. Financial success in 2025 wasn't about being clever, it was about being organized. It was about giving your future self fewer fires to put out. And that mindset alone put many ordinary savers years ahead of where they otherwise would have been. Good habits are worth more than good predictions, because predictions expire, habits compound. And in an economy evolving faster than any we've seen before, habits are the part you actually control. So what does this mean for 2026? It means opportunity for those who stay flexible. High debt levels, geopolitical realignment, and technological disruption mean the world will keep shifting. Those who adapt calmly will be ahead. It means strengthening liquidity and understanding the difference between an emergency fund and an opportunity fund. Cash isn't an investment, it's capability. The ability to act quickly is often worth more than chasing higher returns. It means prioritizing purchasing power. Avoid unnecessary debt. Own a healthy mix of quality assets. Consider gold and silver as long-term stabilizers and be intentional with spending. It means building skills, especially around AI. We're already seeing wage premiums for people who integrate AI tools into their profession. Dedicate even 1 hour a week to learning something new in this space, and you'll be ahead of most people. And it means keeping emotion out of financial decisions. The people who struggled most in 2025 were often the ones who chased hype, panicked in downturns, or constantly shifted strategies. The people who did well were steady. So here's a simple framework for 2026. Be liquid. That means aim for 6 to 12 months of cash or short-term investments. Be protected. Hold assets that hedge volatility, including precious metals and quality equities. Be growing. Continue investing regularly. Be learning. Stay curious about AI, finance, and global shifts. And be calm, because the world rewards steadiness, and the last 4 years proved it. Remember, your best tool isn't always a stock picker. Sometimes it's simply the off button for financial news when emotion begins to take hold. So, as 2026 rises and the calendar turns, remember the power of the lessons we've earned, not from the chaos or markets that climb, but from choices repeated time after time. If you found this helpful, please like the video, subscribe to Money and Power, and tap the notification bell so you would never miss an update. And in the comments, let me know, what financial habit will you carry with you into 2026 and why? Thank you for watching, and wherever you are, I wish you peace, clarity, a Merry Christmas, and a prosperous year ahead.